Hey guys, TommyBryson here, and as you guys know, I love investing, and although it's easy to go out there and buy a stock and then sell it for a profit or basically sell it for a massive loss, the answer is if you want to invest the correct way, based on foundations, based on a real art form, in reality, you gotta go out there and find out exactly how the professional investors actually invest. So if I didn't know anything today about investing, and by the way, it took me over 200 books to finally find this book right here, I would basically get this book right here, and it's called Common Stocks and Uncommon Profits. And by the way, the forefront is by Warren Buffett. It basically says, I am an eager reader of whatever Phil has to say, and I recommend him to you. So Warren Buffett basically recommends him to you because basically, guys, once you read this book right here, you come to find out all the things that Warren Buffett talks about and how he thinks the way he thinks. And a lot of those ideas come from this book right here. And by the way, I got this copy, but I don't know if all the copies are the same. But I think someone wrote a note here saying, for example, may all the advice in this book right here help increase your bank account. If it's like a random person, thank you, I appreciate it, and it definitely will make a massive difference. Okay, this book right here is definitely one of the best books when it comes to investing, and that's why today I'm going to go over the basics that I actually learned in this book. And on top of that, if you want to read this book, great, buy it on Amazon. But if you basically want to listen to it on Audible, I have a link down below to Audible, and that way you can go ahead and get this book for free. And by the way, I literally just finished reading the audio version literally today, and it basically is a great read. Although it is 8 hours, it is definitely not boring, and it's very, very interesting, okay? And by the way, guys, if you guys are new here, I post a video every single day, so make sure to also subscribe and hit the bell so you're notified. On top of that, also destroying the like button. And by the way, if you have any favorite books, comment down below. That way I make a video about them also. Now, here are the 5 things I actually got from this book right here. And the very first thing that comes to mind, guys, is basically the 15 points of Phil Fisher when it comes to going out there and actually selecting his stock. By the way, guys, if you guys don't know who Phil Fisher is by this point, he's basically a legendary investor that created a lot of the ways we actually analyze stocks today, okay? That's who Phil Fisher is. Think about like the Rock of wrestling. Well, he's the Rock of investing, okay? Before Warren Buffett, then it's Warren Buffett, and then so on and so on. But yeah, he's like the Rock of investing. Now, the 15 points of investing are basically 15 things you have to look for whenever you're going to actually go out there and invest into a company, okay? Now, I can't go over all the 15 points. Obviously, I don't want to make a 20-minute video here to bore you guys, but the answer is read this book to get all the points. But I'll share with you guys my favorite 3 points that you have to have whenever you're going out there and investing into a company. The first point is basically, does the company have a product to help it make money over the next 3 to 5 to 7 years? For example, Apple has the iPhone. That's going to make money for them for a very long time. And then you also have, for example, Coca-cola. Coca-cola has sodas that are going to make money for them for a very long time, like they have been for decades now. So the idea is whenever you're going to actually go ahead and invest into a company, that company has to have a product or a service they offer to help them make money over the long term, not just the short term. Very important, okay? I don't want to invest into a company where they have this very simple product, competition come in, take that product away from them, and now I'm left with just a trash company. That's not what you want. Then point 15 is, does the management have unquestionable integrity? Meaning, for example, does the management tell you the truth during the good times and also the bad times? And every time I think about this, I think about Warren Buffett and how honest he is with basically his mistakes, his goods, his bads, what he's learned, how he does it. You have to invest into a company where the management is honest, have great integrity, because basically you are already an investor, but in a sense, you're an outsider. So if someone's basically telling you wrong information or not being 100% transparent, that is not what you want when it comes to your investment. And point number 7, and this one right here is big, although you might not think is big, is basically, does the company treat its employees with respect? Okay, which basically means, for example, there's this big rumor in the whole stock market where basically there was a company that didn't allow employees to go on break, and they worked in a factory. So basically, to eat lunch, they had to basically sit by their entire stool and eat lunch with greasy fingers, okay? Do you think a company that treats their employees with such disrespect is actually going to go ahead in the long term? The answer is probably going to be no. And by the way, here's the bonus here. You want a company that's constantly trying to do things better in the competition and constantly trying to improve, because basically in capitalism, there's always someone right on the edge of your butt trying to see what you're doing and basically do it better and beat you and take your place in the market, okay? But those right there are 3 things. But again, this book gives you 15 things to actually look for when investing into a company. Now, the second thing I want to talk about here that I actually learned from this book is basically whenever you're investing into a stock, you have to put a story together, okay, about the stock and where it's actually heading. You know, when I first started investing, I was like, well, I know the price of that stock is like $50 per share. It says it, right? But in reality, Phil Fisher says basically in the stock market, we live in a world where basically everyone knows the price of everything, but no one knows the value of anything, okay? Because basically, a stock price is just an appraisal. And every single day, the price goes up and down, and that's just fluctuation. It's not risk. But in reality, if you're going to go ahead and invest into a company, for example, like Apple or Berkshire Hathaway or Coca-Cola or big companies out there that are very good and solid, the answer is the price is not the most important thing, right? Because basically, you buy today at a certain price, but over time, if that company is good, if that company is solid, and you know the value and the real value of that company per share, the answer is over time, the price per share of that company right there is going to keep going up and up and up. If you invest, for example, into a bad company, hey, I know the price here, it's cheap. The answer is, if the company is bad, most likely is going to go down and down and down. So the answer is, don't just focus on the price, but focus on the real value of that stock and that company you're actually investing into. For example, the stock market might show you one of the most popular companies in the entire market today, right? Oh my gosh, this company is amazing. The price is climbing and climbing and climbing. But you stop for 1 second and say, hey, let me take a look at the foundation of this company and its true value. And you find the best thing, the management is terrible. Employees hate working there. They rely heavily on 1 client or 2 clients, and if they go away, basically, they don't have anything. On top of that, the CEO is inexperienced. And a lot of Wall Street is saying, for example, hey, this stock is going to go up forever. The foundations and the true value of that company is going to tell you basically, hey, here is a different story. The CEO sucks. The management sucks. Employees hate it here. And basically the customers, they rely way too heavily on big clients. And if those go away, basically the whole company defaults, which basically means you don't want to invest into that company just because the price is up. The price fluctuates every single day. You want to invest based on foundations and also the true value of the company. And that's what this book is all about. Now, the third thing I learned in this book is basically sometimes it's worth paying a premium for a very good company. For example, when I first started investing, I was like, you know what? I'm not going to buy that company because basically it's $5 to $10 over my target price. And by the way, this happened to me with Etsy, where I bought at a certain price. I was like, okay, I'm done here because basically I don't want to buy any more shares at a higher price. Today, Etsy is worth a ton of money, right? So the idea is that when you're investing, for example, into a solid company, the answer is look at the company itself. Is it going to grow over time? Does it have a good product? Does it have good management? Does it have an edge over the competition? If the answer is yes, and you're going to pay a premium, the answer is over time, if you're going to hold on for a very long time, the price is going to go up and up and up and double and double. And before you know it, that $5 to $10 price you're worried about is not going to make a difference. But don't stop to invest into a good company over a few dollars or, for example, a few pennies, okay? You have to think bigger than that. Now, number 4, and by the way, I say you have to think bigger than that because basically I tell myself that every single day when I'm going to invest in something, but basically, hey, it's too expensive. If it's a good company, it's a good company. Now, number 4, guys, is basically you have to zig when everybody else is zagging. Tommy, what does that mean? Does that mean just be a contrarian? The answer is obviously no. Whatever you zig or zag, it has to be based on facts, okay? For example, you have automobiles, you have depressions, and you also have airlines, okay? For example, everyone knows this, okay? One of the best times to go out there and buy a stock is usually when the entire world is in panic and no one wants to buy stocks because basically people thinking, hey, it's going to crash even further. And you go ahead, you swoop in, buy a lot of good companies for a very big discount, temporarily, of course, and then they climb right back up. But basically, you made so much money. Imagine buying, for example, Apple when the stock went down like crazy over one rumor, but then it goes right back up because basically the company is solid, right? On top of that, airlines, okay? Back in March of 2020, everyone said, hey, airlines are done. Bankruptcy alert. No one is going to recover from this. But in reality, I said, well, everybody is zagging. Let me see what's on this side of the zig, right? I went ahead and found out basically, hey, bankruptcies are not that much of a big deal when it comes to airlines because basically it's happened in the past. So I don't think the airline industry deserves a 50 to 80% discount on the share price. So I went ahead, when everybody zigged, I zagged, and I bought a lot of airline stock, right? Well, today I'm up around 50 to 60% on my airline stock. Now, let's say, for example, a bad example here is basically, you can't always zig and zag just because, okay? It has to be based on facts. If I told you, for example, hey, electric cars are going to be the future. And you say, for example, well, if he says that, I'm going to go ahead and zag and just buy Ford stock. The answer is, it has to be based on something. If the trend, the facts, the stats are showing, basically, we're going towards electric cars and vehicles, you might want to go and zag with everybody else because basically all the data is pointing to that. Don't just be a contrarian and be like, hey, you go this way, I go this way all the time, because sometimes you will get burned very heavily. It's kind of the people, for example, say, hey, you know what? I don't believe that automobiles are going to anything. I'm just going to go ahead and invest all my money into horse carriages, okay? That person is burnt, right? Because basically, automobiles were definitely the future, okay? That's the point I'm making. Whenever you zig and zag, make sure it's based on facts. And the last thing is this, guys. Number 5, only sell a company or stock whenever the fundamentals actually change. Don't just sell because, for example, the stock has never been up this high. I have to sell right now. No, you want to sell whenever something has changed to the point where you're like, hey, this is bad. The management just got worse. They don't have a good product. Everything is going to shambles. This is when I want to sell. But if everything is going good, you're up a profit, everything is well, or you might be down, the answer is over time, if you buy a good company, it's going to continue to go up over time. If you buy a bad company, it's going to go down over time. So whenever you sell a company, don't be, for example, hey, I made 50% on the stock, I'm going to go ahead and sell because basically, in 3 to 5 years or 10 years, if that company was solid, you could have made, for example, a 10-bagger, 1,000% of the money you actually invested in the first place. So just make sure before you go ahead and sell a stock for a profit, make sure the company has changed in some way to the point where you say, hey, this is no longer a good investment. The perfect time or lengthening time to actually hold the stock is basically forever until the stock changes to a point where like, hey, I don't want to invest here anymore. This stock is a relic of time, aka IBM. But the point is, you guys get my point here, okay? And overall, guys, by the time you're done reading this book, and by the way, I did not do it justice whatsoever. There is so much information here. It's a wealth of information here, okay? But by the time you're done here, guys, a lot of the things I heard Warren Buffett talk about in all his meetings every single year, I heard them here in this book. And this book is like over like a decade old, maybe even more, a lot older than that, maybe like 40 something years old, right? The answer is there is so much information here that is still applicable today that you want to read this book and go ahead and get it. Again, link down below to Audible or go on Amazon and just get this book right here physically. However you like to read, I still recommend you actually go ahead and read this book. There is so much information here. And by the way, books like these, you spend $12 or $15, and in reality, they can make you millions or potentially billions like they did for Warren Buffett, okay? So always look at this stuff like a good investment. That's the way I see it also. I'll see you guys tomorrow. Thanks for watching. As always, like this video if you liked it. If you want to talk to me or text me, search my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And before I go, make sure to also subscribe and hit the bell so you get notified if I didn't say that before. And if you want to watch another video basically on the top 3 investment books that I actually recommend, here's that video right here. And click my channel. I'll see you guys tomorrow. Thanks for watching. And as always, peace.